Morning everybody, how we doing? Morning Fabio, Ladder. Morning. Another week. I was just reading up on the news just before I have a look at the charts and stuff. Internet and keyboard apparently slow this morning, yeah. It's Monday morning, everything's allowed to be slow on a Monday morning. I was just reading through news basically over the weekend, mainly Ukraine-based stuff. Nothing particularly interesting. Apart from that, Secretary Yellen, I'm not seeing evidence of a US recession right now, which is fine. So right now there's no US recession, but I'm pretty sure there's one coming. Other than that, there's no real news over weekend or overnight. It's all a bit flat this weekend. We'll start off going through news for the week. FOMC this week is the main thing, and GDP for the US. Apart from that, it's a pretty flat week this week. Morning, AWO. Today we've got nothing. Business climate at 9 o'clock, which doesn't do anything. We've got consumer confidence tomorrow at 3 o'clock, which again doesn't tend to do an awful lot. We've got Aussie CPIs on Wednesday, early morning, so that's something that's potentially going to move the Aussie. Hopefully we'll get some push on the Aussie dollar, durable goods, and then we've got FOMC. So FOMC is obviously the big one. Big rate increase, 0.75 basis points, or 75 basis points this week, or this month. So big increase. The Fed really getting ahead of inflation, or trying to get ahead of inflation. Morning, Franco. Nice big increase there from the Fed. Obviously, we've pretty much, as everybody else, it's been negative and zeros basically throughout the whole COVID period, and now we're coming out of the COVID period and the inflation's getting out of hand. Everybody's putting up their interest rates. Morning, Neo. Prior to COVID, we were sort of around the 1.25 to 2.5 level. Pretty much the highest it's been since 2007, really, 2008, early 2008. So what they're doing is they're putting the rates back up to their highest point for the last sort of 10, 12 years, 14 years, to try and get on top of inflation, basically. So the US are ahead of the curve. We're not ahead of the curve, but they are really on it, really on top of it. Morning, Stevie. So it's good. So if we get this 2.5, that should be good for the US dollar. If we get any more than that, even better, but I don't think they're going to. That's a big increase, 75 basis points is a big one. So that takes us up to pre-COVID levels. But the problem obviously being is during this whole COVID period, the economy has got an awful lot worse. Inflation's running away from everybody. Oil and gas prices have gone through the roof. The cost of living has gone through the roof. And we've also, on top of that, got to pay for everything that happened over the last 2 years. This is not just the world, it's the world, not just America. So getting ourselves back to 2.5% isn't enough overall to combat inflation and everything. So they are obviously making big headways into it, but this is not the last rate increase we're going to see. This is going to make a big impact. I'm expecting a big move off the US dollar on Wednesday, positive move. So we'll see what happens there. We've got GDP the following day. And then on Friday, we've got PCE, US dollar. We've got a few other bits of CPI preliminaries in there as well, which doesn't tend to do much. Oh, excuse me. Monday morning for the euro. Fairly flat week, apart from Wednesday. So Wednesday's the biggie. Just a quick recap of Friday. I closed out loads on Friday, did 1.14%. I didn't cover what I closed out on Friday, so I'll quickly whiz through everything that I did on Friday now. Because there was a fair few bits. 22nd, where are we? Yeah, all the way back to there. So, Euro US dollar. What was that? That was a buy stop. Ignore that one. US dollar CAD. So where's my US dollar CADs? There. Loads of US dollar CAD are closed out. Decent movement on that one. So as you can see there, lots of profit taken across the board on that one. Ooh, where's my pen? Why is that doing all the way over there? So took some positions off there, those three banked, and I took one off with a little bit more drawdown control. So going back to the hourly, you'll be able to see that one. So this was initially a point. No, sorry, it's that one I did it on this time. This one here, that position. So I've got one there, and one there. So these are all 0.23s. This one I've done drawdown control on twice already, just to reduce it down a little bit. This one I took half of that off, put that down to a 0.11 with some of the profits taken there. So you can see that one, where's the US dollar CAD drawdown control, that one there. I took $88 off on that one using all the profits from the US dollar CAD. So these are a couple of aggressive positions that I put on to get some profit basically. This was, I think, and it's playing out absolutely beautifully at the moment on this. This is a wick off spring here. Market's just about to open. So prices moved down. We've done a little accumulation. We've built up a book. We've pushed down. We've taken all the liquidity from everybody basically. And there's also some trades back there we've taken liquidity from. And then we've pushed back up. And then we're accumulating at the highs. So the next move, if this is a wick off move, typically after the accumulation at the highs, we get kind of a symmetrical triangle or some kind of compression, and then we get a big break to the upside. So this is looking pretty good for this week. Nothing's moved obviously so far today, but we may well see this sort of action happening ahead of FOMC. Depends on what they're going to do, but I think the market is probably factored in this 2.5. I don't think we're going to get a shock on it, so we could start a positive movement hopefully on US dollar at any time this week. Morning RK, Jesse Diamond. So yeah, US dollar CAD, New Zealand dollar Swiss, closed out two positions there, one there and one just behind there, you can't see. Just close those out. Still got two positions on short on this one, was nicely in profit this morning. So this position up here that I've taken off, you can see I've been banking on this. Every time it's pushed up, I'm just getting out because we're just in an accumulation at the moment. We did break lows today, which is good. We've still got lots and lots of potential support though. There's loads of areas this thing could just pop back up into the top of this range. So I'm just going to keep adding as we get up there, if we get up there. But I'm looking for this to break down basically on some Swiss franc strength. Just not really got it particularly at the moment. Pound US dollar, what was that? That was an ADR scalp, which took off. There, short, got two other short positions on this one. Again, US dollar strength will push pound US dollar down. So looking for some US dollar strength still. And there's another one there. Yeah, there's two positions there I took off. And then Aussie dollar CAD. I thought there was another one of those. Was there not? Yeah, there. Okay, so this is a short. So with all the profit that I made on all the other trades, I did some drawdown control on the Aussie dollar CAD. So this is I've got this on short at the moment. We are gradually in this really slow incline at the moment. This is based off of Canadian dollar not being as strong as I was expecting it to. Oil price is dropping again a little bit. So the Canadian dollar's not quite had that oomph I was expecting it to have. Therefore, the Aussie's taken advantage. So because I've got these positions on, I'm just doing some drawdown control on this. I'm not in deep on it by any shape or form at the moment, but I'm just keeping on top of my drawdown just in case at the moment. So I'm just being a little bit extra cautious. So that one there I took off, and that one there I took off as well. That was a full position, I think. Yeah. So this one here was a 0.31, a full size position. I've got one on there, and I had these bits close together, so I reduced risk and drawdown by pulling that one off completely, and I've pulled a partial off of that, pulled 50% of that position off. I'm still happy with this short. It's just I want to keep on top of the drawdown basically, because this one's just not really playing out at the moment. So I'm only in 1%, it's nothing, but it's just not playing out. So same as I did with the US dollar CAD, just keeping on top of it with the drawdown, just to make sure it's under control. So sitting in 2.6 at the minute. Well, it varies. We're sitting in 1.9 this morning and sitting in 3 point something on Friday. So, you know, goes up and down. Still got my hedge on the CAD. The CAD's just not doing anything either way. So I was expecting to be out of one of these by now, but not. Oil. So positions I've got on, we've kind of looked at them. Aussie dollar CAD. So still liking this Aussie dollar CAD. Short. Just pushing up at the moment on Canadian dollar weakness, so we need some strength on the CAD. We've got the Aussie dollar news this week as well, CPI. So I've got a feeling that might power up the Aussie a little bit, but we'll see. But that's on Wednesday. I've got pound US dollar on short, again waiting for US dollar strength. So, you know, obviously this is a massive downtrend, pulling back into the 24. I've been making money out of it as we're pushing up and pulling down, pushing up and pulling down. But you see, last week was just literally accumulation. So hopefully this is the start of accumulation drop. Wednesday's FOMC being the catalyst. So I'm quite happy with that still. New Zealand dollar Swiss, waiting for some Swiss franc strength based off of the euro rate increase. We haven't had the strength off of the euro, so the Swissy has been a little bit weak. But there's a nice M pattern reversal starting on that one. So we've just made a new low. Just zoom in so you can see. So on the 4 hour, we're putting this high, push down, made a new low, lower high, lower low. So market structure's nicely shifted. We've had the reversal alert on the 4 hour, just coming up to retest. Retest could be anywhere in this zone. I would expect it to be somewhere in there though. If we retest, I mean, we may just collapse from there, so we'll see. But yeah, quite happy with that still, just not going anywhere. And US dollar CAD, waiting for that US dollar strength. And again, not going anywhere. Massive week of accumulation last week, just sat sideways, took some profit off of it. It's just not gone anywhere, so waiting. Oil is my main issue at the minute. Well, I'm saying main issue. It's just another one that's kind of stuck at the minute. So with oil, we had this push down. We had all the trend line junkies jumping in on that fourth hit of the trend line. It seems to have held. So I'm watching these lows carefully today. So anywhere around 100 to 125 ADR today. I want to see some signs of strength starting to come in on oil. This should be really the low, but it's struggling a little bit at the minute. So again, just going to keep an eye on this when it pushes back up again. I might do a little bit of drawdown control on it on its next push up, but I'm hoping this is going to be the peak formation low. We just didn't quite get a new high, so we made a lower high there. So I want to see us making a higher low, which will basically give us symmetrical contraction, and then hopefully that breakout above that trend line. But yeah, bit disappointing in oil at the moment, but everything's very sideways, so it's just it's tough trading conditions at the minute, but just have to get on with it. Right, so that's everything there. Indices this morning, no gap on the DAX. Opening range is terrible. Nothing's happening on those. So Friday, oops. We had a nice big push up on the DAX. It did the gap fill very nicely. Looked like we were going to try and take out these highs, and then the whole thing turned on its head and collapsed. So very bearish. So remember I was saying on the US indices, we've had multiple days up now. We should be looking for a down day. We got a beautiful down day on Friday. It was a very nice day. Same thing on the S&P and the same on the Dow. So all of the indices basically getting to a point of exhaustion. These are the highs on the DAX that we're looking to hold. We tapped into very nicely. We didn't have a second bite of the cherry on that. Put in a nice big hammer or shooting star there. So looking for a drop today. So looking for this continuation to start. But because we're entering summer months now, there is every opportunity for the market just to go into a nice big wide range. Where that range is going to be from is difficult, obviously, because we haven't put in a new low yet. So nice big bearish engulfing there on the Nasdaq up at the 72. We came up into this area. This is the area I was looking at for us to act as a resistance. We tapped into it, we broke through it on Friday, and then we undid the whole lot. On Thursday, then we undid the whole lot on Friday. Nice big bearish engulfing, pushing up at the moment, looking for a push back down again. Earnings week this week as well. We've got big names out this week, so there could be a lot of volatility this week. Not necessarily direction, but we're going to get a lot of volatility. So, excuse me, Franco. What do I mean by drawdown control? Have you not watched the Boocamp? It's all covered in the Boocamp. Drawdown control, managing drawdown. So taking parts off of positions, yeah, so that we don't get too much size on, and we use the profits to reduce the losses. All covered in the drawdown, in the Boocamp. S&P. This is the worrying one. The S&P for me. Obviously, you see on the Nasdaq, we came up, we've hit this area and we rejected it. S&P's way behind. So we've just pushed our head above this area here, broke it, held, broke it, and we sort of pushed back and broke it again and held again. The pullback on this, we didn't manage to break back down below this high. So what slightly worries me at the moment is we've got the Nasdaq looking like a nice rejection off of resistance. We've got the DAX doing the same thing, a rejection off of resistance. We've got the S&P holding above support with a resistance area which is a fair old distance. It's like 150 to 175 ADR push from where we are at the moment. So we've got a little bit of divergence across the indices, whereas the S&P looks bullish, whereas the other indices look bearish. So tricky one this morning to know what we're going to do with these. So I'm just going to wait and let the market decide at the minute, but the market's not going anywhere at the moment. Yeah, tricky indices at the minute. The Dow, very much the same sort of thing. So that is the area of previous support, resistance rather, which we are kind of hovering around. We broke back down below it on the Dow, but we've got all this area up here potentially to come up and tap into. So it's hard because we got a couple of indices saying, yeah, looks like we're rejecting resistance and we should be going short. We've got a couple of indices holding at support with plenty of upside on them. So yeah, 50-50 shot at the moment, isn't it? So Can we look at US dollar yen? Yep, we'll have a look at that one. Would you say we're inside a control candle on the DAX from the 19th? Yeah. So this one here, yeah, we're still in this control candle. So basically what a control candle is usually a very strong candle. This is a good example here. A very strong move, and then it turns into, because of the size of it, it turns into basically a support and resistance for inside bar range. Yeah. So when you break out of that, then you tend to get another move to the direction. So when you break out of a control candle, which is basically a candle which takes control of the low and the high, and all the candles after that, they can push outside it, but as long as they don't close outside, we assume that this one is going to stay in control and act as a range. So at the moment, this is the control candle. Big, strong push, and we are just flirting at the highs at the moment. We can't break out above those highs. So strategy on this would be, when you see a control candle, every time you get outside of the control candle, you can build a short position. Every time you get out the lows, you can build a long position. And you keep doing that until the control candle fails. Just a range at the end of the day. But this is where the range was created. So when you get a big candle, it's basically price discovery. So we go into range, which is what we call balance, which is where the market is happy to conduct business. We have buyers and sellers that are in agreement. This is the area we should be trading at. We get out and try and get out of those highs, and the sellers go, no, we want to be selling here. The buyers go, no, we want to be buying here. And as long as that keeps happening, that range will hold. When the range breaks, then you have a new area of price discovery, and we're trying to find out where the buyers and sellers are going to be happy next. So these control candles would quite often act as that, especially in summer trading months. So it's just another theory, it's another way to work, another way to look at the market. But yeah, with indices at the moment, we've got a very mixed view. Morning, Kennelly. So that's your indices. Bitcoin will be doing the same thing because it's basically the indices now. Ethereum's got a very different view to Bitcoin at the moment. Ethereum seems a little bit stronger, but it's still getting held down. Don't forget, everything is still being held down by the 2472 on all of these. So we're right in the sell zone at the moment on all of these indices. So your Nasdaq is testing the 72 at the minute. So is the S&P and the Dow. So this is where I would expect us to start next leg down, really. So looking a little bit bearish at the minute. So let's have a quick look at the dashboards. Someone wanted to look. No one's wanted to look at gold, have they? Gold. Remember I drew in that level on gold. This double bottom, which we pierced and rejected, and that was obviously a nice area of support, which was previously a nice area of resistance. So we didn't quite get to it on last week. We got very, 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 very close. So it's this level here. 1677. We got very, very, very close to it, and we've rejected it. So it's difficult to tell whether or not this is actually a rejection or not. It's one of those. If you look at it on the 4 hour, we very just about kind of missed it. So for me, I would be, if I was going to be trading gold, I would be happy to build a long position from here. If it comes back down, there's a good chance it might just take that out and put in a nice W formation at the lows. But gold's a very tricky one to give any directional bias on at the moment. At the minute, I would say it's just another US dollar cross. Gold's not really got any independent power at all. So if that's the case, we should really be looking for shorts on it, because we're expecting US dollar to strengthen on the rate announcement on Wednesday. So it's a very, very difficult one, because selling at the moment, i.e. expecting US dollar strength, you're selling directly into what is potentially going to be a strong support where you'll get a bounce. Buying at the moment, you're buying against potential US dollar strength. So it's a very tricky spot down here. So guess is as good as mine on gold at the minute, but at the moment it's certainly bearish, isn't it? You can see it's definitely bearish at the minute. Ideally you should be looking for shorts, but we've got this area of support. So if you wanted to, I think probably the best play on this one at the moment is to start looking for shorts here, but just be very wary and maybe get out at these lows. But as I say, I don't really trade it. US dollar yen, somebody wanted to look at. So there's a nice long opportunity on US dollar yen there at the moment. Nice pullback. Have we got any extensions? No. So yeah, I mean US dollar yen, this is where I would start to look at longs on it. You've had a reversal alert. Oh no, you haven't. Not yet. You've had one on M5, but not on M15. So M15, we've just pushed down on Friday and made new lows. Haven't had the reverse alert because of the strength of that move on Friday. So yeah, just about to get an entry on that one, long potentially today. So like US dollar yen, very nice area. Anywhere around about the 24 is a good initial entry. Anywhere in here for adding to positions for longs. At the moment, we are going to have to carry on with our bearishness on the yen. And at the moment, based on the fact that Yellen is saying there's no recession in sight and the interest rates are going up to keep them on top of inflation, we should see a good strong US dollar on Wednesday. So yeah, long. Good spot for it. Nicely extended on Friday on the 4 hour. So yeah, looking good. I can't take any at the moment because I'm already double exposed on the US dollar. And I've got no yen on, and that is the best US dollar yen trade out there at the moment, I think. So yes, best yen trade out there, the US dollar yen. Decent selling coming in on the indices at the minute. So yeah, I like that as a long, definitely. If you want to get in some yen, US dollar yen right now is looking very, very nice, but it just doesn't fit my portfolio at the moment. I've got too much exposure on the US dollar to get on it. So yeah, I'd take that one. If I wasn't exposed on the US dollar already, I would be sticking the EA on that and getting first entry on that this morning. But I can't because I've got too much on. So if anybody else has got anything else they want to look at in detail, let me know. If anybody's got any positions on that they're struggling with or anything like that. But otherwise, I'm just going to run through all the pairs this morning and just see if there's any good opportunities out there. The only exposure I've got available to me is yen at the minute and euro. I've got no euro on and I've got no yen on. So that's the only thing really I can look at from an exposure perspective. I'm going to start with the euros this week. Basically because of obviously what happened with the rate announcement last week. So rates went up to 0.5, which is kind of what everybody was not secretly, but everybody was kind of expecting. 0.25 for your first rate increase, considering you're that much under the cosh with inflation and recession and all that sort of stuff, was not enough. So everybody was expecting a 0.5, and that's what we got, which was better than expected technically, but from a market perspective, I think that was already factored in. So what that meant was that the euro did not get that power up we were expecting last week. In fact, it's looking pretty bearish still, isn't it? So we didn't get the impact off of that. My bias on it at the moment is very undecided. Hence, I've got no euro on at the minute. Wow, what was that? We just had a really big, fast move on the on the indices. It's really whipped quickly then for some reason. Not that. Got no news, have we? This morning? No, just a load of volume going in there for some reason. Just taking out the lows from Friday. Cool. Look at that. There's a load of volume coming in at the minute. Interesting. Okay. Anyway, I'm not trading at the minute, so scrap that. Euro, yeah, I'm completely undecided at the moment on the euro. I kind of want to be a bit more bullish on it, but that rate announcement on Friday or on last week, it didn't do anything. Here we go. That's what that was. We got the news late. Market obviously got it a bit earlier. Big interest rate hikes may not be over. September hike needs to be quite significant. I have no major objections to a market view of 150 basic. Oh, by June. Okay. Should be open discussion on bigger hikes. Right. Yeah. So this is kind of what I was just about to lead on to saying. I've got a slightly more bullish stance on the euro. Based on them actually doing the extra rate hike last week. The thing that troubles me about it is the market hasn't reacted in a similar way. The market has remained fairly bearish on the euro. We didn't get any big strong moves on it. So because of that, I'm a bit tied on euro. I haven't really got a bias either way. When you look at a lot of pairs, they're in good spots for potential shorts like euro CAD. So we've got a nice little pullback flag going on at the moment, and it looks really nice for short opportunities. We've also got things like the euro odd, which is at the lows of a recent range, and looks like a nice long opportunity. We've got things like the euro pound, which we've pulled back down below the 72, pushed back up above the 24, and looks potentially bullish. So there's complete mixed messages for me at the moment on the euro. Some are long, some are short, and I've got no real directional bias because the market's not giving any clues. You can see the market was like, yeah, it's brilliant. No, it's not. It just basically did a double-ended stop hunt on everybody. So everybody that was long or short of the euro last week is out of the euro now because they got stopped out. So there's no directional bias on it. So I haven't got anything on the euro that I'm really interested in taking. Euro US dollar, I would love to short it. But when they come out and say things like this, the market is going to like it because they're saying, yeah, we've realised we're not doing enough on it. We've upped it more than we were expecting last week. And the market's not had a reaction. So the ECB is sitting there going, right, well, what do they want? We obviously need to do more. So they're factoring now much bigger hikes. 1.5% by June. The next rate announcement is coming out in September. So to me, that says sort of like 1/4 to 0.5% each increase, which again is not massively amazing. It's not like the Fed putting up 0.75. That's the forecast. It could go higher. So they are doing something about it, but then I don't think the market's impressed. I don't think they're doing enough, fast enough. So I get the feeling we may see a continuation on the euro, but I don't think it's going to be as harsh as we've had. I think we're going to see more of this sort of price action. So weeks of holding. Yeah. So coming into summer months, we know that liquidity's tighter, we get less range and we get more range-bound trades. We've got the euro indecisive at the moment, so I get the feeling it's going to be quite difficult to trade the euro with any directional bias. So I think for the moment what I'm going to do is wait for any RSI extensions on any euro pairs, see which pair it is, and then have a look and see whether I fancy it or not. And the likelihood is the moves that we see on RSI extensions are likely to be caused by the opposite pair, the US dollar. I don't think there's going to be a lot of manipulation on the euro. So that's kind of why I wanted to cover these first, because I really haven't got a bias. A little bit like the yen at the moment. I'm really struggling with a directional bias on the yen, because it is weak. We know it's weak. Kuroda came out last week and didn't do anything to strengthen it. So I want to be long everything against the yen, but when you look at the yen pairs, they are so extended, and they have been so extended for such a long time. I don't really want to be longing them, because they are starting to run into trouble at the moment, but there's no strength. There's no weakness. So what I'm worried about is getting into a position and going, yep, brilliant, let's do it, and then Kuroda comes out and says, actually, and we're going to get something like that, which is just going to do that, and I'm going to be on the wrong side of it. So the yen and the euro for me are just not my favourite currencies to trade at the moment. Short term, not a problem. So if we get any ADR hits to the upside, for example, anything that extends these to sort of 150s, 175s, either way, I'd probably mean revert them. But I have got no directional bias on it at the moment, so I can't say for sure how I want to trade it, which is obviously no use to anybody. But there's plenty of other pairs out there, and I always say this, just because I haven't got exposure on the euro doesn't mean I'm not trading. I'm doing absolutely fine, thank you very much, without trading the euro. I don't need to trade the euro. It just takes some pairs out of the equation. So for me at the minute, sideways, all of them, with a slight bearish stance, which is what I was saying. So if, for example, this pushed up to 125, I'd be interested in shorting it, because I'm a little bit more bearish on the euro and I am bullish on the US dollar. So I'd be more inclined for that to happen than that. So there's the euros covered. No use to anybody, obviously. Aussie dollar CAD. But if in doubt, I always say it, if in doubt, stay out. If you haven't got, a good trade should jump out at you and go, wow, that's a brilliant trade. For example, let's say this week we see that. Yeah. To me, if I got an RSI extension and an ADR hit on that today, and we'd hit that area that I identified as previous support, which broke and now should become resistance, which we haven't tested yet. If I see that get hit, it's like that stands out to me as like, yes, that's a brilliant trade. Look at that. It's obvious. It's plain sight. Everybody in the world can see it. Everyone's going to jump onto that. If I see one of those in the euro, I'll take it. Otherwise, for me, that's the euro's sort of sidelined at the minute. So Aussie dollar CAD, I'm short on based on Canadian dollar strength, which we haven't had at the moment. So we had this one push last week, and since then all we've done is accumulated. We just took out the highs on Friday, which has enticed everybody to go short, and this morning it looks like we're coming up to have another go at the highs of Friday. So we're running into this area of accumulation that we had here. Yeah, so this is where I would expect us now in this 24 to 72 zone to start to see some strength coming through on the Canadian dollar. At the moment, we haven't got it. I'm shorting it, which is why I've done that little bit of drawdown control on Friday using profits from the other trades, just to slightly reduce my exposure on it, just in case we get a continuation squeeze on this one. But it's going very slowly at the moment. So I'm not particularly worried about it, but I'm just being a little bit cautious. So I will continue to scale in as we get up to this sort of area. By the time we get up to there, we'll be at the 72, where I would expect us to start next leg down. We haven't had a proper profit take on this move either, but it hasn't been very strong either. So, it's ambling along just in the wrong direction at the minute. Aussie dollar Swiss, liking this one as a short based on the euro strength, which we haven't had. So this Swiss franc strength that we got on the rate announcement is just gradually being undone. It's the longest flag in the world ever, and it's actually now turned from a flag more into a range. So I'm still short this based on this Swiss franc move, but again, no movement. We've had nothing off of the Swissy since that much. We got down, we finished that move off. We had 3 weeks of lovely strength. Now we've had 2 weeks of just not going anywhere. So again, I'd be looking for short opportunities rather than longs, but you need a catalyst. So if we get an ADR hit to the upside, for example, today, yeah, propulsion gap fill, coming back into this area of balance. We pushed out of the area of balance. This is price discovery. We couldn't discover a decent price down there. We're pushing back. We should expect to get some more rejection up at those highs somewhere. So again, if it hits that, yes, be looking for shorts. If it, however, hit to the low, I wouldn't be interested in longing it. I'm much more interested in shorts just because of the current bias. Aussie dollar yen, same thing with all the yens. I like it long, but we are struggling now. You know, the yen, so this is what, 1, 2, 3, 4, 5, 6 weeks we haven't gone anywhere on this. So for the last month we are just sitting here sideways. Nobody's sure what the hell is going on with the yen. We know it's devaluing, but nothing's really happening with any other pairs, any other momentum. There's just no strength or momentum. So you've got to get into these things, you've got to hold them because they're just taking forever to actually go anywhere. But up at the highs here, which we've rejected recently, if we get back up into there, I'd be interested in potentially shorting out of there. If we get all the way back down to the 72, I'd be interested in maybe longing out of there. There doesn't seem to be any bias on it. So where you've got something which is just kind of flip-flopping about, RSI extensions, just going to mean revert them. Yeah, so just going to keep mean reverting. When we get extensions on them, I'd much rather be long than short, so I'd rather take long RSI extensions. As you can see, that one there is the one that I took long. Yeah, got out loads of longs there. So if we can get back down here, I'd be interested in longing it again, which would be kind of a 24 bounce, wouldn't it? And then using the 72 as a backup if we need to scale into a couple of positions. But at the moment it's just not in the right spot. I'm not going to take it here. Aussie New Zealand I like as a long. This was the first pullback that we had that was sort of only to the 24. This range that we established was just bouncing very nicely up and down. We had a little pullback, we pushed out the highs again, so I like it long. I want it further down for me to get interested in longs at the moment though. Again, not going anywhere. 60 ADR, it's a horrible little pair at the minute. But if you want to get into it and hold it for a week or so, up to there, but it's going to tie your exposure up. Aussie US like as a short. Again, I've got lots of US on at the moment, so we just had a 4-hour ADR 4-hour reversal alert on it. We got a lovely 3-bar reversal which played out last week, and it's pushed down. So I like this short. Again, just not really going anywhere at the minute. So Aussie US shorts based on FOMC increasing the rates next week. On Wednesday. Yeah, so shorts. CAD Swiss is just going nowhere at the minute. Canadian dollar's weak, as you can see, and the Swiss franc's been weak. Therefore, we have an accumulation because a week against a week equals a sideways. The minute you can kind of long it from down here, it just about got extended on the RSI 4-hour. You would have to have been awake during Asia and caught this tiny reversal alert down here. More of a bullish engulfing. That was the reversal, basically, and a retest of it. So just breaking out the highs here. So this one you could kind of get into now, really, as a long. But yeah, I don't really like this either way at the minute. It's going to be a mean reversion pair. So again, longs or shorts really on this one. Thing that worries me about this one, which is why I'm a little bit more long, is this massive propulsion gap off of this Swiss franc. So again, this is kind of the longest flag in the world ever going on. We've got this happening with all the Swissies at the moment. The Swissy looked like it was going. It was powered up. We had 2 strong weeks of push off the back of that rate announcement. And since then, the Swiss franc's just gone... Mainly because the euro. And, you know, the euro's obviously still bullish, still bearish. Excuse me. And obviously the Swiss franc gets pulled along with the euro a lot of the time, and as that's not going anywhere, I think it's holding the Swiss franc back. So again, very difficult to know which direction to take the Swiss franc in at the moment. CAD yen, like it long. Actually, like that long. Oh, exposed on the CAD. I'm already hedged on the CAD. So yeah, again, as you can see, this is where I was long in the CAD last time. We didn't quite get extended. This time we are extended. Yeah, took a long there off that extension as well. Yeah, like it long. So again, if I wasn't already double exposed on the CAD as a hedge, I'd be longing this one to get some yen exposure on. US dollar yen and the CAD yen are the 2 pairs that I like the most with the yens. We managed to push up and put in a new high. So worst case scenario, we'd be looking, if this is going to continue from a bearish move from there, we'd be looking for a pullback on it, wouldn't we, before we push down. So it's a nice looking long opportunity there, but I think potentially we can come back up and challenge those highs again. Should be enough strength in the CAD coming through this week. But again, barrel counts have been wrong for the CAD. Oil prices decreasing a little bit, which has been wrong for the CAD. It's had good positive figures for everything else, but you know, it's being held a lot by oil. So strength in the oil this week. Well, I think we'll get some decent movement on the CAD, and as long as Kroder doesn't come out and say anything on the yen, we should get a good move to the upside on the CAD yen. Swiss yen, same sort of story. You know, we're not going anywhere. So looking for a challenge down at these lows, looking for some kind of reaction again up at these highs. So again, this one you can probably take in both directions at the minute, but waiting for RSI extensions. I'd rather be longing than shorting, much rather, which is why I'm not in short off of this. So I'd like to be down, ideally below the 24, so with an RSI extension. So any ADR hits this week, any RSI extensions on the 4 hour, potentially on the hourly as well. So you could take an hourly RSI extension as well. If you get down to here, you'd probably be somewhere around ADR, which would be down at this potential support area here. Yeah, so it's a lovely area of support coming up, nice accumulation, breakout. Anywhere down at ADR. ADR hit on this would be lovely today for a long. But right now it's hovering in the middle of nowhere. Can't really do anything with it. Covered all the euros. Pounds. So pounds I'm liking short still. We've still got nothing happening much with the pound that is positive, so we should be looking for short opportunities on it. It's taken ages to get anywhere at the moment, the pound. The ADR's really dropped on it. So it's given me no signals to go short. Kind of there, just about. We had some hits to the upside. And you can see I took that one there. But I got out of it. I wasn't sure. Rejected out of that zone, which is where I was looking at these highs for rejection, which we did very nicely. So it's all good, but I'm looking for shorts on it. And since I got out of that trade, it's just not. It's been flip-flopping, choppy, not really giving any decent trade opportunities. Very wicky. Lots of big intraday movement on it. So lovely intraday for trading, but very difficult to get into from a position perspective. So, but like it's short. So any kind of pullbacks into the 24.72 area, push back up into propulsion gaps, ADR hits to the high, RSI extensions to the upside, but looking for short opportunities. Pound CAD, same thing. Any hits to the upside. So this one's been coming down very nicely. So we put all those shorts on there, which all worked out very nicely. We seem to be doing lots and lots of double topping at the moment on this one. So if we get back up to the 24 and triple top there, that's where I'd like to be getting in short on this one. I've got CAD exposure on already, so I'm going to get into it. But the other way to look at this one is that we are continuously making new lower highs. Yeah. So market structure on this is very, very, very nice. And if that's going to continue, this is exactly where you want to be getting in short right now. So it's a bit of a more aggressive short, because we haven't had a decent pullback. We haven't got any RSI extension, but it's very slow moving as a pair at the moment. But again, we're just waiting on that Canadian dollar strength. All the other pairs have managed to gain against the CAD. The pound hasn't. So it just shows you how weak the pound is at the minute. Lots of lovely rejection on the 4 hour. If you look at the hourly on this, you can see the rejection better. So we had this big, strong push up out of the highs. Rejection wick, push back down, tried again, failed, tried to get up again. You know, we're definitely struggling here. So you could take a reversal alert on the hourly or drop down to M15. You just had one on M15. So I like it as a short. So looking at it here, it doesn't look like a good short. The short was up here, wasn't it? That was where you really wanted to get in short, up at these highs. But right now, looking at it on 4 hour, it's in a pretty good spot. Decent rejection to the downside. So looking for good short opportunities on that one. Getting that one now, really. Pound Swiss, horrible mess. I'd rather be shorting it. As you can see, shorted it here. We got extended on RSI. Again, any extension on RSI, I will be shorting. Any ADR hits to the upside. Needs to be a decent ADR hit to the upside really today, but I'll be looking for short opportunities. This low is holding at the minute. So you can see obviously we've come down, we've tapped into this low again. This is the last sort of resistance. So we got a level there, and we got this level here, which we've tapped into and rejected. So if you want to class, I would class that as the high of the range, somewhere around there. So push up to the 24 area is where I'd be interested in shorting. Up to the 24 moving average, 200 ADR, this high, somewhere around there. Or maybe just below it, assuming that we're going to continue to put in lower highs. Yeah, but then we're going to be in a wedge like that. So we'd expect that to break to the downside. So yeah, it's pushing up at the moment, so I'll be looking for short opportunities. Not yet, not here. I want it up here on RSI. It's not going to get up there because it would have to be somewhere up here for RSI extension to happen. But lower time frames, watch it on the hourly. Hourly RSI extension. If we can push up anywhere into this accumulation, into this nice area of balance, we could well see some sellers start to come out there. If not, then up there. So entry 1, entry 2 on pound Swiss. Pound yen, we got this little break out of this symmetrical triangle. It's kind of just tapped the top of the triangle really. It's still kind of in, this is why I don't use trend lines. You can always line up a trend line to make it completely different. Look, a couple of tiny adjustments on that, now it's a completely different trend line. Yeah, some people use the wicks, some people use the body, some people use a different body, different wick. Trend lines are completely subjective. You can make them do whatever you like. Some people have the trend line sitting there, some will have it sitting there. But at the end of the day, we are contracting. So the overriding factor in whichever way you draw your trend lines is we are in contraction. So we're waiting for that breakout at the moment. This one, obviously, we've got a bias like that at the moment. So there's just no power to the upside. We're not going to get any explosive moves moving up. I have no directional bias on it whatsoever. I'm just not interested in the pound yen at the moment. Don't know where it's going. I would be more inclined to be looking for shorts on this at the moment, to be honest. It's probably the only yen pair that I would be thinking, yeah, don't like it long. Possibly euro as well. But yeah, I can't really see any opportunity on it anywhere. Pound New Zealand, we managed to get a breakdown out of the channel, out of the previous range that we were in, so that's not valid anymore. We've made a new low, but all we've done is really come down to the next sort of couple of levels that we've got available to us, which is kind of in this area here. So just take that fib off. We tapped very nicely into that support. So this whole area here, this is a support zone. Yeah, which is those previous levels. Yeah, so this is a lovely little support resistance area here. We've tapped into it. Tried to push back up again, but you know, pound is very, very weak. New Zealand dollar and the Aussie dollar are just sideways at the moment. There's no strength. There's no strength anywhere in the market at the moment. You're Franco. Good night. So yeah, looking for shorts. Ideally, I think on this one, but it's not really going to be on New Zealand dollar strength, I don't think. Although saying that, we've got Aussie news this week. On Wednesday morning, we got CPI figures, so that could potentially power up the Aussie, which will bring the New Zealand dollar with it. But if those figures come out mediocre, I'm not necessarily sure we're going to get anything. So you know, look at it. It's just hard to trade that. It's just chop. It's just sideways. There's no directional bias on the pair. You literally take your life into your own hands when you trade it. I would go with RSI extensions on it. I don't even know which ones I would take best. You know, every single RSI extension you've taken on this one has worked. So if you get an RSI alert on it on 4 hour, just get in, regardless where it is, whatever happens, just get in. Because at the moment, as long as this thing is just flip-flopping, which is all it's doing, yeah, it's just going up and down, up and down, up and down. As long as it continues to do that, you're in, you're fine. Bias on it. So I was just having a quick look at what's happening with oil this morning. We're pushing down a little bit more. Yeah, I'd have an ever so slight bias to the downside on it, but I'd be happy to take it in either direction. Pound US dollar, I'm short and I want to stay short. Waiting for US dollar strength. Pound is weak. We just didn't have any movement at all last week on the US dollar. So we're just waiting. Sitting around waiting. This is what this job's all about. Sitting around waiting for them to pull their finger out and move the market. That's really what I'm doing at the minute. Just sitting waiting a lot. New Zealand dollars, again, no real bias. So when you've got a neutral bias on an instrument, take into account the one that you're trading against. So the Canadian dollar should be strengthening up. Therefore, I'll be looking for shorts on this one in a really good spot. I'm fully exposed on the CAD, so I can't take it, but I would be taking a short on this one. I'm on the Aussie dollar CAD, which is pretty much the same thing. So New Zealand dollar CAD the same, looking for shorts, but again, looking for shorts all last week. You had opportunities to get out of them, but did you go anywhere? No. Just went sideways. So keep looking for shorts, keep adding your shorts, keep taking them off, keep adding them, taking them off, adding them, taking them off. Eventually it's going to go down there somewhere. So as long as it's doing that, and that's what I've been doing on the Aussie dollar CAD, just milking it, taking them off. And obviously done a little bit of drawdown control because it's getting it's a little bit stronger, the Aussie, than the New Zealand dollar, hence this one's moved up a little bit more, but same play on both of them. 80% of the time waiting and 20% of the time trading. Yeah, the old 80-20 rule applies to everything. 80% of the time we are range bound, 20% of the time we are trending. Therefore, if you're a trend trader, 80% of the time you're going to be sitting around, which is why I'm a range trader, because 80% of the time I can be trading. I've done a video on that. Should you be a trend trader or a mean reversion trader? 80% of the time there's mean reversion opportunities. Depends whether you want to be in the market a lot more or just sitting on your hands waiting. Both work just as well. Just got to take your pick. New Zealand dollar Swiss, I'm short. I don't like the idea of this trade as much anymore as I did last week. So my main premise for this was Swiss franc strength. We're not really getting any indication of Swiss franc strength at the moment. So the rate announcement pushed the Swiss franc down. It battered everything for a couple of weeks. Since then, we've just had this horrible... it feels to me like it's rolling over. Yeah, it just feels like it's rolling over gradually. Very, very slow. 54 ADR on it. It's going nowhere. We're on our second week of sideways movement. I had an opportunity to get out of this morning with about 0.3%, and I thought, nah, I'll leave it because we've just put in a new low. Yeah. So market structure is shifting. And what's it doing today? Pushing up again. I will get in again up at the highs, and I will get out again, assuming that we're going to stay range bound. But I think with this one now, I'm just going to look for an opportunity to scratch the trade and get out. In fact, I can get out of it pretty much flat now. I've taken plenty out of it. I can get out with a 0.1 loss, but I'm going to give it the benefit of the doubt that it is going to pull back down again. But it's just not going anywhere. The Swiss franc, it's lost what potential momentum I think it had a chance of having when the euro rate announcement made no difference. So it hasn't weakened the Swiss franc, it just hasn't given it the strength I was expecting, and obviously the New Zealand dollar's going nowhere. So I will just get out of this when it pushes back down next time, and I think I'll just call it a day and say, right, well, I made my money out of it, had a profit out of it, I've probably had 1.5% out of it or something. Just one of those. I just don't want to be tied up in it. I'd rather have my Swiss franc exposure available to me a little bit more, and get into some more a different Swissy really. New Zealand dollar yen, like it as a long. We're just putting a 3-bar reversal in at the moment. This one I have got an opportunity to get into actually. No, because I'm short New Zealand. I don't want to hedge myself. I like this long, just because yen weakness, Aussie dollar news, which could well bolster that and will drag the New Zealand dollar with it. And it's there's a very strong range low being put in at the minute. This area here, we're not interested in dropping below this area. So worst case scenario on this one, you'll be looking for 3 positions potentially before you come back and re-challenge these highs again, assuming that we're going to stay in this range. It's more likely the New Zealand is going to push up against the yen unless we get that sudden yen strength and Kuroda says something. But so I quite like this long from where it is right now. We're just about extended on the 4-hour, so if it does push down and try and test the 72 again, it's going to be even more extended. And we'll get that little push out of it. So it's a nice looking little long. We just had a reversal out on M15, which is just retested. If you look at it on the hourly, you're just about to get a reversal out on the hourly. So yeah, nice double bottom. Potentially it's got a chance of running the highs, I think. So it's a nice support. So I like that as a long. But after we've done sort of an ADR, I'd probably be interested in getting out. We've got a 90 pip ADR roughly. So somewhere up there, mid there as a pullback, just in case, I'd probably like to get out of it. So you can get a good, sort of ADR move to the upside out of it, I think, New Zealand dollar yen. New Zealand US is a short. I'm in the, not in the Aussie US, am I? No. I mean, other US is short, but New Zealand US, like it as a short. Lovely 3-bar reversal had at the highs, took out the liquidity there. We're up at the 24.72 zone. We're up in a previous area of support resistance. It's just a nice chop area that I think we're going to get a short out of when the US dollar powers up. So, but again, not moved. All we had last week was, where's Monday gone? There. So we had that one day of strength, and then we were like flip flop, flip flop, flip flop. We're just not going anywhere. Lovely head and shoulders going in at the moment. So break of that neckline, look for shorts. And US dollar CAD. So US dollars, I'm looking for long opportunities on these. Longed the crap out of it for the last week, hoping that it was going to go from the 24 bounce, which it didn't. So, you know, I'm in it. I've done a couple of drawdowns on it just to be safe. You never know with the US dollar. You just never know. The Fed comes out. They're notorious for it. Just coming out and saying stuff, changing their mind. You know, there's no recession, there's no recession, no recession. We might be going into a recession. Market panics. Oh, no, sorry, there's no recession. There's no recession. And it just seems to be the talking head manipulated pair or currency, basically, is the US dollar. So at the moment, I'm long. I like it long still. CAD's very weak at the moment. And we should get some decent move off of FOMC. So happy to stay long. We got the wick off spring. We're accumulating at the highs. So it's got everything going for it. It just looks nice for a long. Reversal alert down there. We had a lovely one on M15, which I took right down at these lows, basically. So remember last Friday, was it Thursday, Friday? I was saying I'm looking for them basically, let's move that out of the way a minute. I'm looking for them basically to take this liquidity here, which is what they did there. So I got in first bullish sign of liquidity being taken and rode that all the way back up there on Friday, which is a beautiful trade. But we haven't gone anywhere since. So still long. Nice 72 bounce. We've got this level here as well, which potentially, I don't think they'll come and do that. They would have done it here if they were going to take that liquidity. If there was any, there probably isn't. So I think we've got good movement to the upside open to us now. US dollar Swiss, really no idea on this thing. Wish I'd have taken the short bounce I identified, but I didn't. I was already exposed and I couldn't take it. So pulling down towards the lows. If we get down towards these lows, I should be looking for longs. So this is why I'd like to free up my Swiss franc exposure that I've got on the New Zealand dollar Swiss, because I'd much rather be in US dollar Swiss long than New Zealand dollar Swiss short at the minute, because it isn't doing anything. So by getting out of this trade, it frees me up to get into some more Swiss franc. But this thing's just crazy unpredictable, which it always has been. But at the moment, I'm liking it long based on FOMC on Wednesday. So the opportunity to get in was on. Oh no, this is one. Yeah, so this is the one that we got the opportunity today. So break above these highs here. Get reversal alert when we break here. Like it, just really like it. The M5 reversal alert was on Friday. That was the one that was on Friday. So yeah, looks good for longs. And US dollar yen, love it for longs. I'm not getting in because I've got too much exposure on the US dollar at the moment. But yeah, I would love to take this one long. US dollar yen, like it. So that's everything covered. It's very difficult at the moment to get into anything with any conviction, because we're getting so few. I haven't even covered the RSIs today, you'll notice. There's nothing on ADR. There's nothing obviously on weeklies. Monthlies are all the same as they were on Friday. Hourlies, we've got nothing. We're flat. And the 4 hours, we've got some things extended. Most of them are yen-based, which are all good long opportunities. But, you know, so the RSI dash, you know, we're just not getting any 80-20s or 85-15s. Very rare at the minute, because the market is summer trading. We are doing that a lot, and we will continue to do it. So always looking for range bound opportunities in line with the trend. So, you know, things like this, got some range bound opportunities to the lows. If you want to take a 24 bounce, RSI extensions to the downside. So just follow the trend at the minute. Current trend, just follow the trend and basically take any lows, any RSI extensions, any ADR hits to the downside. Just looking for long opportunities there, but trying to find them. And the trouble is with me at the moment, when they're coming up, I'm in other positions, so I can't, you know, not going to overexpose myself on anything. Just waiting for stuff to move, but that's life. Indices this morning, utter nightmare, hideous mess. I've just been watching the volume profile. I've been watching this run up and down the volume profile while I've been talking It's just horrible this morning. Horrible. Absolute suicide trading. Wick after wick after wick after wick. Just horrible. Don't do it. Leave it. Trade New York. There's just no movement this morning. But yeah, all the other indices are the same. So ES basically. Just been watching the ES run up and down the volume profile here. So this is this. Remember that big push down that we had on that news that just came in? That's the only move we've had so far. Just after the open, that news came in. We pulled back down into all the orders down here. So we literally have just moved from value area high, rotated, value area low, rotated. We're seeing here now. So short value area high, long value area low. Lovely big order sitting up at the highs. Everybody's wanting to get in short up there. And if it does break out, a lot of people wanting to sell it back down at the value area. So looks like a range bound morning at the moment. But I'm not going to trade it. I'm not going to get interested in Globex at the moment. I'm just not, long term's just not profitable for me. So I'm staying out. But yeah, if you want to trade this today, I'd be just looking for shorts at value and shorts and longs at value. Assume we're just going to put in that cluster. And if we move up above here, I'll be looking for shorts out of there. That's what I would be doing, but I'm not, because it's just not conducive at the moment. We opened up yesterday on Friday. We closed on Friday back inside the last 3 days value areas. So we've got value area high and low there, value area low and high there, and the value area high and low from Friday is in the same spot. We are now sitting at 39.61. Yeah, around a point of control from Friday. So this is Friday, Thursday, Wednesday's value area low, Thursday's value area high. The whole time on Friday we spent bouncing inside the value areas. So this is push up, this is the rollover, potentially before the drop. So it looks to me to be bearish today, but if for any reason we get a push out today and we can open up in New York outside of the value area from Friday, value area low, which is here, 39.41. If we open up below 39.41, I think we're going to get a flush today. I don't think we will. I think we'll open up in value area, which again means we could be in a horrible rangy situation. So nice big bearish divergence going in. Sorry, bearish delta going in at the moment. We're up in the value area now. It's a big old value area. 16 tick stop. Less than 16 tick reward though. It's not very good. It's just not very good trading conditions. So stay out. If in doubt, stay out. Right, so that's it for this morning. Nothing much else to look at. Just waiting for stuff. Waiting for stuff. I will need to add Aussie dollar CAD. I'm fine on. 25, yeah, fine. Aussie dollar CAD, I'm fine on. Pound US dollar, fine. New Zealand dollar Swiss, fine. So US dollar CAD. If we pull back down to this sort of area today, I will add on. Certainly if we get down to an ADR low, I shall add on. But where we are at the moment, I've got this position on, which is the only full-size position I've got. So I will look to add again back down at these lows. I'm hoping we don't get down there. I'm hoping we just accumulate and push from here. But I might add on to that one today. And oil, I've got a position pretty much where we are right now. So I will add on to oil. If we get a 125 ADR hit somewhere down at those lows, I'll add another oil on. Other than that, I just got this feeling today we're just going to be sideways. So don't forget, this week it's FOMC week. So one of two things plays out on FOMC weeks typically. We either get a Monday, Tuesday range days, and then Wednesday we get a manipulation and some kind of push, or we get a Monday, Tuesday push and then Wednesday reversal. So it gives you a clue as to what we're going to do on Wednesday, depending on what happens Monday, Tuesday. But this is the first FOMC really going into the holiday period, so it could well be quite a quiet one. But if that doesn't come out at 2.5, unleash the hounds. It's going to be a biggie. If it comes out above 2.5, I shall be holding on for dear life to my US dollar positions and riding them as long as I possibly can, potentially towards the end of the week. I think we'll get some really good movement, but we'll see. We'll see what they do. So that's it for today. If you've got any other things you want to discuss, come into the Telegram group. I'm always in there. Links in the description. There's a link coming up in a minute on the stream end screen. Also got the Futures Telegram channel now, which is linked from the main channel. If anybody wants to discuss futures, I'm going to try and record my futures trading sessions so that I can play them back. The problem is I'm always flicking around different screens looking at stuff in CFDs as well, so I'll have a lot of editing to do. Yeah, I'm going to try and record some videos and just put some voiceovers over the top of my thoughts on what I'm doing with the futures trading, and then put them in the group. So if anybody's interested in futures, there's links down below to get hold of Jigsaw software, which is what I use for futures trading. And there's links in the group as well, because you can get some nice discounts on that at the moment. But other than that, I'll be back tomorrow morning, 7:50, same time. And yeah, hopefully we get some movement today, you can make some money. And I will speak to you in the morning. Have a good one.